Hello everyone, and welcome to the new episode of the Learn and Trade with Popeye. So today I want to share some findings that I discovered after going a little bit deep on my journal and in my review, and I want to make a comprehensive guide, let's say, on how to try to catch some sniper entry. So it's a combination of style that you will also find reference on another video. So in this video, I will sum up some of them and try to give you some tips to find some cool entries. But before moving to the video, a big thanks to Bluefin for sponsoring the YouTube channel. Bluefin is a super cool non-KYC exchange that is running a lot of campaign and with a very smooth interface for trading. I'm offering a 20% discount on fees if you join with my referral link that you will find in the description below. So come and join and trade with me on Bluefin, clicking the link in the description below. Also, before moving to the chart, make sure to subscribe to the channel, leave a comment and a like, so we are all good for the future. But without further ado, let's check some chart, some past trade that I took in order to help you to improve your entries and potentially to find some cool sniper entry. So first of all, I reviewed many trades. I think I took a sample of 30 trades. All these trades were shared in advance and very clearly on X and on Telegram. So make sure always to follow me and to have the notification on if you want to see this trade. But here are some example. As you see, the entries are always pretty spot on, and most of these trades have almost no drawdown. This is an example on Ethereum. This is an example on hype. This is another example on Ethereum. This is an example on Bitcoin. If you see the short is more or less a classic trade, but if you see the long sniper entry, zero drawdown, and the move to the other side. This is a short on Bitcoin, also very similar. You see super sniper entry, zero drawdown, and the move catched exactly on the other side. Very similar to Link, this trade is still open, moving on the right direction, zero drawdown, sniper entry, and move down. These two trades with Ethereum, very similar. You see almost zero drawdown, sniper entry by descent, and move to the other direction, both of them. This, I think, another is one of those two in Ethereum that you already saw, but with a clear picture. The first one, pretty clear. This was a trade on SUI. I think the trade was stopped somewhere here with some profit, but again, you can see the level of entry. This is another trade on Plume from, I think, last month. Very good entry and a clear move. So, as I said, I reviewed all this trade and I tried to find some common denominator to share with you, and also for me to improve my entry in the future and try to look this kind of setup. So basically, these trade are could be either continuation or reversal. Not really the point, but the point of this trade, they have something in common. So let's say that we are looking for a continuation trade. That we want to trade something that in high time frame looks something like this. What these trade have in common is a few denominator. The first one is that we are looking for a strong move, a strong displacement taking place. This displacement should definitely break or confirm a structure. So we don't want to see something like this and a move like this and look for an entry. We don't want to see something confusing. Even we don't want something small and then look for an entry. We really want to see a move that is breaking something, that is confirming an impulsive move, an impulsive displacement. This is really the core context that we are looking to trade, where there is a move that is creating a very strong impulsive break, um, moving structure, or in a continuation, or even in a trend reversal, but should be very clear. Should not be an SFMP, swing failure pattern, and should not be something that is confusing. They should create a fair value gap. Without being too technical, you have to see really a move that is breaking a level, and that level is properly broken. So this is the first concept, a move that is strongly, impulsively, aggressively breaking a previous level. Whatever was an high or whatever was a resistance, like in this case, boom, you want to see a very strong move. The second concept behind this, the context where this trade have higher success, nothing as 100%, but it could be a better success, is that you want to see before this aggressive move that we talk about some sort of consolidation. So you want to see the price according to the time frame you're looking. Could be the 5 minute, could be the 12 hours, doesn't matter. You have to be aware of what you want to do in that certain time frame. You want to see some sort of consolidation. Then we will see why. So whatever is a range that is going like this and is broken up, whatever is a move that is moving like this in certain time frame, but you want to see in this level, you want to see some sort of consolidation. So before this strong impulsive move that we want to see breaking some level in a trend or in a range like this, we want to see some sort of consolidation before this move. And this was this number two. Number three, you want to see, most of the case, not all the case, but you will see in the example, after this impulsive move, you want to see some sort of slow decline. So it should be manipulated, a mechanical, let's say, decline, that you have this boom, the strong move, then you want to see some sort of decline going down. Let's say pattern trader would call it some sort of falling wedge. So the impulsive move, then slowly coming down, and then we do have the three concepts behind the context that we want to trade. Then we'll see technically how to look for the sniper entry. But it's really important that you memorize the context where we want to look for this trade. The context is whatever is a range, whatever is a trend, we want to see an impulsive move that breaks something strongly, break a level clearly with a fat, full body candle. The second concept is that before this break, we want to see a little consolidation, a little range, a little sideways price action, inducing this impulsive and breaking move. The third concept is that after the impulsive move, we want to see some slow grinding price action going down. Then everything will depend on the time frame you choose. Remember, price is fractal, so it's something you can do. You want to see a 15 minutes break, you will look for a 5 minutes consolidation, and then you will look for a 5 minute going down. It all depends on the fractal. If you want to do 4 hour, 12 hour, 1 day, the same. Just you have to always remember the price is fractal, and you have to contextualize what you're doing according to the context, according to the time frame we are looking. So let's go to find a very simple example that was in the trade that I show you. That was basically what we had, I think, a couple of weeks ago here on Bitcoin, but you can find many other examples. That was this weekend, where we did have this consolidation following the, and let me make it more clear as possible. So the first concept is that we want to see a breakout that is really legitimate, that is really strong. And in this case, it was not a ranging, was not a trend, but was a range. So we had a range here with a very well established resistance level. You see, resistance, resistance, resistance. So what happened? We do have our boom, our strong break of this level. So this is should not be confusing, should not be doubtful like what happened more or less here. This is a huge green, okay, in my case blue candle that is closing well above all this level. You see, there is no doubt. This is the breakout. This is an impulsive move. This is a displacement. So this is number one. We do have our break of something relevant. We will see also the other case with the trend and whatever. What brought this displacement, this break, as we say, consolidation. So we had from the 29 until the 1st, so for a full weekend, as sideways price action. So we have a clear consolidation that in this case ended up being an accumulation following a very legitimate breakout. In this case, now probably you have to go a little bit lower on the time frame. We didn't have a very slow move, but you see, slow, 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 then this is a bit impulsive, but you can see that there was some slow motion. So price stalling here and then retracing. What we have, we visit a level that then we will see how to find this level. Once this level is revisited, boom, we have the second move. So this is a clear trade setup that we have seen in all the trade I was showing you, know, with the clear move, retest, boom on the other direction. I think this was the trade that we are seeing now. So we do have some topping coming down and then a second impulsive move. Very similar here, move, retracement, and second move up. This is more trending. We'll see later this case. So we do have the first two are mandatory. The third one is a little bit less, let's say, from my review, is not always happening, but let's say still interesting is the case. You can see in a lower time frame what I was saying, that price is fractal. Also, this is the short that was here, I think. Probably is this one. What happened here? So what we have in very low time frame. This is the 15 minutes. You can also watch the 10 minutes. I think this was a scalp in a very low time frame. Something similar, because what we have an sort of an impulsive move, you see here, that is breaking this level and this structure. You see, we are going down. So here there was an uptrend on this time frame, and this uptrend is broken. Why is broken? There was this little consolidation. This consolidation is pretty clear. You see, consolidation, we are breaking down. This in the 1 hour is probably one candle or two candle. We break down a clear uptrend and a clear structure. After this, we go to revisit more or less the origin of this one. ICT have named for this. I want to explain you the logic without using too many technical words and technical name, and then boom, a continuation lower. We move once again down lower. So again, this move a little bit quick in this case, then this slow grind up, and then boom, the second move. We have the three components that I'm trying to explain it. One was in the 1 hour or 4 hour, and the long and the short was in the 5 minutes. So to explain you the way you also have to approach the fact that price is fractal. Next, I want to explain you a little bit the way to find that exact trigger entry, but please make sure to trade with me on Bluefin. So if you want to take any trade with this kind of setup and approach and to find the sniper entry, make sure to trade with me on Bluefin. You will find the referral link on the description below. You will enjoy a 20% discount on fees. You will be eligible to all the campaigns we are running with the Bluefin team. And also, important to know that Bluefin is a very cool exchange with a lot of liquidity, very simple to use, but is also non-KYC. So it's very simple to join. You just need an email address, 30 seconds in your setup, and you can start to trade. So don't wait too long. Just use the referral link down below and come and trade with me on Bluefin. So what can help you to find this sniper entry? So basically, uh, three factor that I'm using, that concept that you will find video for each of them on how I use them. So I will not go deep on this concept of what they are and how you have to select them, whatever, but just to tell you how to use them in combination. So this was the first example. Now we have this consolidation here. We have the strong candle that is breaking this resistance. So we know we are triggered because there was the displacement. So now we need three things. The first one is to use the volume profile and look where the point of control of the last consolidation sideways range price action that brought at this breakout. So we know that we want to see a clean and proper breakout, but we also know that we need some sort of consolidation before this breakout. So in this case, I took the fixed volume profile. You will find a video on the Learn and Trade series. So if you don't know how to use it, don't ask me, but just check for the video down below. On the playlist, and we take the volume profile of more or less all this area, and we look for the point of control, that is this blue line here in the center. That is, you will see in the explanation of the video what is volume profile, what is point of control, but is the most traded area in terms of volume and time on this specific range. Second, we want to see the demand that gave us this break, this impulsive move, and this is the last red candle in case of a bullish move, or the last green candle in case of a bearish move before the breakout move. So you will also find the video on demand, so do not ask me, check the video what is demand and how to select it. In this case is this big red candle here. Third, we want to take the Fibonacci extension of the move that gave us this breakout. So in this case, the move started from here, the move ended here on this high, so we want to look at the retracement of this move and look for the golden pocket or the 0.75. As you can see, now we want to try find Confluence on this level, and you will see that the three levels in this specific case are very close to one another. So the demand is all this gray box is a little bit big, point of control 0.75 very close. Never put your entry exactly here. You will see that it was front run, then it changed according to the exchange you will use, but you will see that these three more or less gave us the perfect level. The other example that we saw was in the 5 minute. You will see that it's pretty similar. Is this one. We can remove all of these first. This trade specifically had also other concept behind, but you will see that there is here a little consolidation for the breakout. You see that this was probably in the 15 minutes, now I don't remember, the last green candle before the move down, and we have Fibonacci. So you will see that point of control in this case is a bit higher. I'm not sure it's a problem with the exchange, but you have supply in this case, not demand, because it's a bearish move, 0.75, and it's the perfect retest. I wanted to show you another few examples so you can memorize also chart and how it looks out of the theory. This was Ethereum that I check in my journal. Really, I had a very high win rate on Ethereum lately. Very similar concept, very strong breakout. There is no doubt that this is a super legitimate breakout. This big move above all this resistance level. We have a consolidation before, that is this one. So we take, I think I took to trade here, the first one and the second one, but okay, just for the sake of the video, we look at this. There was this strong move, the move down, and the test. Let's check. I think is this one. Yes, because this move already happened. This is the second. So as you see, the concept we have, strong breakout, consolidation before the breakout. Also in this case, you have a slow move down. And what we are looking, the three component to trigger this concept there, then we have three concepts to look for the entry. Probably this is in the 1 hour, but whatever is okay. 4 hour demand is here. The last ramp candle before the breakout in the case of a bullish move. The Fibonacci of this move. Too much stuff in this chart. Give me 1 second. The bullish move is 1 and 2. Yes, okay. This is already the move. Okay, this is arguably starting from here or from here, but I think I took it from there. Sometimes it's a bit subjective. Demand, the move, and the point of control of this fixed volume area. You see, we are more or less there in the middle. You get the sniper entry and then a second move. Then this second move didn't break more, but still you got a super good entry. You could move immediately, stop at break even, and ride the move on the other way. I think here there was a similar setup in a lower time frame, but I'm not sure if I will keep it. This was another setup that you saw on the trade on X, but probably yes, was this one on a very lower time frame. I didn't ride all that move, but was more or less this one, where we do have a consolidation in low time frame here. We do a breakout of this consolidation, retest and moving higher. If I'm not wrong, one was there. Another one is this, a little bit different. But was this level here, where we do have clear consolidation. This I think is a trade from a few days ago. Clear breakout, consolidation before, retest 0.75 demand, and second move higher. These I think are more ranging environment. I want to show you an example that was here in the trade that I show you. This was in higher time frame on hype, a trade that I closed I think yesterday. But the concept is very similar. So the structure here is, comparing to Bitcoin and Ethereum, more a clear uptrend. As you can see, hype has been very strong with a clear uptrend, going up, going up, going up. That's why I was saying it can be applied both in down up a trending environment, a ranging environment. But what we have, that we do have some stalling here. Price is coming down. We range for a bit, as you see, and then we have a clear break of this high. This is a super clear break of this high. We have the this break is given by the consolidation. So break number 1, consolidation number 2, slow motion down in a sort of a falling wedge, retest of the level, and move up for the next leg. 3 conditions to trigger the context, so to see if what we are looking for is there, and then we do have the other triggers. So first of all, Fibonacci from the low to the lie that created the move. It gave us 0.75 and golden pocket, point of control of the last area using the fixed volume profile that is here. And finally, demand, in this case, is 12 hours, the last red candle before the breakout. As you see, demand was a little bit sliced, 0.75 perfectly tapped, and also point of control perfectly tapped. After here, you have your entry, and then the second move up. So I think it's enough for the video. Let me summarize. We have two times three. So to trigger this kind of concept, we need a strong breakout, whatever is a resistance or whatever is a high or a low in a trend continuation or in a trend reversal or in a range. You want to see a very strong break or something. This break should be preceded by a consolidation, so a range sideways price action. After this, let's say it's optional, the price should, after this strong move, come down slowly, like in a sort of wedge, back to our entry. So once you have these 2 or 3 concepts all together, we want to see, we want to look for the entry. To look for the entry, you want the confluence of 3 factors. First, Fibonacci, 0.75 or the golden pocket. Second, the point of control of the consolidation that brought us to the breakout, displacement, to the strong move. And third, those 2 levels should be more or less in confluence with demand of supply. That was the last red or green candle, according if it was bearish or bullish move before the strong impassive move. That is your entry, so you can have your famous sniper entry, and then you can drive the move to the other side. So that's everything for today. I hope you find it helpful. Also, remember, you will find video about how to use volume profile, how to use demand and supply, how to use Fibonacci down in and learn and trade with Popeye. So these are video very important to be watched if you want to better understand today's video. Also, remember to trade with me on Bluefin. You will find the referral link in the description below, so you will support my channel and I will be able to do as much as video as possible in the future, but also you will enjoy a super cool exchange, non-KYC, with a lot of liquidity and very simple to use. Also, before leaving, make sure to subscribe, leave a comment and a like, so I will know that you enjoy this sort of content, and I will try to create many more in the future. I think for today is everything. So make sure to stay safe out there in the market, and we'll see you in the next one. Bye.